Welcome back, investors, to the Investing with Our YouTube channel for another portfolio update. This one will be for the first week of June, and as you can see, it's been a very red one. So we finished last week on 147,449, and we end this week on 142,733 for a 4.1% loss, which equates to just over £6,000. Now, this was kind of expected at some level, maybe not to this deep red level, but the market has gone up since the first week of April. If you look at the weekly stock charts, as you can see, in the beginning of April, we were 5.4%, 4.5%, 6.9%, then a very small down week, and then just green, green, green. And the other down week on the third week of May was just 0.3%. So in a way, it's a bit of a healthy correction, maybe not as much as 4.1%. But again, if you zoom out, this is not really a major drop. So why did this happen? So two main reasons. One was Broadcom. So even though it beat on earnings per share by 2% and it beat on revenue just about, so double beats, generally this is pretty good. If you look at both of these statistics, earnings per share was up 54% year over year, and then revenue was up 48% year over year. So really strong, solid earnings, but the guidance from the CEO, Hock Tan, was not as solid as the market expected. Now, the Broadcom CEO is generally quite conservative with his guidance, so this is not something that's unusual, but the market reacted quite strongly, thinking that the future for AI build-out is not as strong as it was once suspected. Now, the second piece of news, which I don't have a bookmark for, was that NVIDIA is using less memory for its new Rubin chips, and that affected, which had a pretty brutal week where it was down 11.73%, which is $800 in terms of share price. And at one point, it had highs of 1,087. So the market was spooked a little bit. However, there was this post from Marius, investing in the UK, which is a great account to follow. This guy's got some very impressive returns on his portfolio. And he put a post up of this, and this is the capital expenditure metrics for some of the Mag 7. Now, they are all due to spend a lot of money, and the majority of it is going into AI build-out. So if you look at Meta, 125 to 145 billion, Google 180 to 190, Microsoft 190, and Amazon 200 billion. Now, this money has to flow into somewhere, and it's still going to companies that are going to be helping out on AI build-out. If you look at the VIX, it's currently at 2151, which is really good if you want to be buying. These are levels that I would be happy to buy at. Anything above 18 is decent. Obviously, you want it to be higher if you're buying, so maybe it will be on Monday, but these are levels that I'll be happy to deploy. And there are a couple of companies that I want to try and look to get into, and both, again, are companies related to AI build-outs. So, for example, with Micron, it's memory, and these two companies have related products. And the first one is Credo Technology. Now, this is a company that I almost bought last week. I was very, very close to pulling the trigger, but then I thought I'd wait to see where the market is. Now, what does Credo do? It provides various high-speed connectivity solutions for optical and electrical Ethernet applications. Now, I mentioned Corning, which is a recent buy I made on connectivity solutions such as optical fibers, and this is another similar company. If you look at some of the metrics for this company, recently the revenue and net income is quite high. So revenue of 1.34 billion, and you've got net profit margin of 35.37%. If we look at the balance sheet, look at this. In terms of total assets in comparison to total liabilities, it's very, very strong. You've got cash and short-term investments of 1.44 billion. If you look at long-term debt, it's only 20 million, which is not much at all. And then if you look at the free cash flow, it's at 29 million so far. So really solid metrics. If you look at the current PE, 83.35, not ideal, but I think we have to accept that some of these high beta names, if you look at this one, is quite high, 3.24. But that also means that there's potential big growth going forward as well. We have to accept that you have to pay slightly more in terms of PE ratio for these kind of companies. But if you look at the forward PE, it's 23.91, so very reasonable. So they are projected to grow in terms of revenue going forward. So this is a company that I would like to add if all things continue. The ROE, which is a metric that I look at, is 34.41. So this is something that's decent. Now, the second company I want to look at potentially adding is Marvell Technology. Now, again, what do they do? So they design, develop, and sell analog, mixed signal, digital signal processing, and embedded standalone integrated circuits. Again, for AI build-outs, it includes Ethernet solutions, controllers, network adapters, and switches. So this is a company that would do well. And Jensen Huang has said this would be the next $1 trillion company, or this should be the next $1 trillion company. Take that with a pinch of salt. But what Jensen does and the companies he does help really do well going forward and have done well. So he's predicted quite a lot of the companies that he's mentioned to do well, and they have done. And this is another one. Again, if the AI build-outs continue, which it seems like it will be, then this is a company that, again, will do well. P ratio high again at 91.97. If you look at forward PE, it's 42.97. So again, another one with a decent forward PE. If you look at ROE, it's not as strong as Credo at 6. But if you look at sales on a quarterly basis, they're all going up. If you look at for a quarterly basis for Credo, again, this one is going up. One thing I like about Credo actually is that the market cap is only 38 billion. So that means it's got room to grow. Its sales of 1.34 billion, again, low, which means that any sizable deal which are being handed out within the market has got a much more meaningful effect on its revenue numbers and its also share price. Also, being a smaller company, it's could be a potential takeover target, which is something that I haven't talked about on my channel because I mainly own large companies. But when a company gets bought out, usually the buyer pays a premium of at least 30%. So it's a great way to make huge gains. So these are the two that I'm looking at going forward. Now, if we look at the overall portfolio, as you can imagine, with such a big down week, a lot of the companies will be red. But the two companies that did really well this week, firstly was Oscar Health. If you look at my position, we're almost at 50% gain. We have 409 shares, an average cost of $16.59, and currently it's at $24. So this is a company that we're seeing at least temporary rotation into. It seems like healthcare is a sector that the money is flowing out of semiconductors right now, at least for Friday at least. So I wouldn't say this is something that will continue to happen, but at least for now, Oscar has done well, and the other healthcare insurer within my portfolio, United Health, also had a decent week at 4.31%. So overall, many of the positions are down, but I'm still up overall in my positions. If you look at some of the holdings, Google still up 111%, Micron still up 90%, Nvidia up 70%, Broadcom still up 78%, even though it had a really huge down week at 13.82%. This is a company, if you don't have a holding of, I will still be buying this one. This is a really solid performer. And just because the guidance from the CEO was a little bit lower than the market expected, not by much, doesn't mean it's suddenly become a bad company. This has performed very well for me, and I think will continue to do so. What other ones? Then you've got Tesla still up almost 77%, Centrica up almost 70%. And then you've got KLA, which is the best performer of the portfolio right now, even though it's down 0.4%. It hit above $1,150 a share, and ASMR also up almost 100%, but these are smaller holdings of mine. So that's it. Bit of a down week, but it happens. It's not something that worries me overly too much. These kind of pullbacks happen from time to time, and if you can, buy. And if it stays at this level, I'm looking to deploy some of my cash, which is at 1.5K right now. So thank you very much for joining me on this video, and I'll see you on the next one.